How's it going, everybody? It's Stas here, and in today's video, just like always, we're going to be breaking down the overall markets and talking about the craziness that went down today in terms of the S&P, the Dow, and the Nasdaq. And I also want to go over what I personally did in the markets today, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade, and some that I'm actually looking to buy here for the long term right now. And like you all read in the title, is this a fake rally? Is this something that is going to be short-lived? As you all saw, the markets were just insane today. They ran up nearly 12% if we're looking at the Dow Jones. And I want to go over, again, is this going to be short-lived? In my personal opinion, am I running to buy stocks right now? We're going to go over everything in this video. So hit that like button for me, consider subscribing to the channel, and if you want to be further connected with the Strive Smart community, feel free to join our free Discord chat and our free Facebook group, which both of those are linked down below in the description box. So let's just get right into it, guys. The markets, again, they were crazy today. You know, they never fail to amaze me, especially in this time period where it's extremely volatile, right? It's almost expected that we're going to move 5-10% in either direction pretty much every single day, right? And that's how it's been, again, over these past couple of weeks. The S&P 500 today ended up closing up 209 points, up almost 9.5%, guys. This is insane, and this is really due to the stimulus package right now being debated in Congress, right? The markets gapped up aggressively today in hopes of that bill being signed, right? And that's kind of what the market is pricing in at this point, which raises a couple of antennas for me. Have you guys heard buy the rumor, sell the news? Well, this could be what is panning out right now. And that's not to say that we're going to dump once this bill is passed, but I'm saying that there's a possibility that that happens. And let me talk about some technical levels here that I'm watching in terms of the S&P. So at this point right now on this hourly chart, we clearly broke above, and we actually held this 50 SMA as a support today before closing on a very bullish note. And you guys can see it on the daily chart here. We gapped up, we ran up. At this point, we were up like 190 points, 200 points, whatever. We pulled down. We saw a bit of a retracement here. And if we go back to that hourly chart, that's exactly where we tested this 50 SMA and popped. So that is why this was a very bullish move at the end of the day, right? But one main resistance that I think for us to see another little pop in this market that we need to break, it's 2450, right? 2450 here, you guys can see it. It was a resistance from yesterday. What was that? Yesterday, 2 days ago, or actually 2 trading days ago. Strong resistance from then, and back a couple of trading days ago before that, it was actually a support. So for us to fill up this gap, we're going to need to see the break up, obviously, above 2450. And where am I getting this next resistance, which is at about 26-ish hundred? Well, if we pull back on the S&P 3-year 1-week chart, we can see 2580, 2600, this general area is a very strong level of resistance. It was once a support, but obviously now that we've broken below it, beneath it, it's a resistance. So I think it's possible, guys, in the short term that the S&P could see a rally. We could gap up, fill this gap, maybe even tomorrow, on this anticipation of this bill being passed. Heck, we could even rally up to this 180 SMA, putting the S&P at 2,700. That's possible in the short term here, but overall, I'm not buying this rally, right? I'm buying long-term positions, but when it comes to trading, I'm not balls to the walls going long quite yet, because I still think the peak of this CV pain, the obvious reason why this market is down, I think the peak is yet to come. I really think that this market, it's going to rally in the short term on this stimulus news, but eventually I think it's going to fall back down. Whether it's 2450, it could literally be here, guys. We could wake up tomorrow, markets gap down. That could happen. Or whether it's 2580, we might see another leg up before resistance gap down. Or whether it's 2700, I think it's going to happen eventually. We're going to see some resistance and we're going to drop, and ultimately that buy the rumor, sell the news, it could play out, right? And the way people made money off of that is they clearly bought stocks, on the stimulus package news, either today or the previous trading day, right? Yesterday, people were buying stocks, and they make money while everyone is kind of moving the market up in hopes of the bill signing. And then they're going to dump off their shares, right? And they're going to make that nice little short-term profit. Sure, that's not going to be everybody, but there is a small amount of people, large amount of people, who knows? There are people out there that are profiting doing this. And there's been a lot of stocks over these past 2-3 trading days that have absolutely erupted to the upside. But again, I'm not convinced that this is the bottom, guys. I really don't think it's the bottom. I could be wrong completely, but that is just me. So be careful. Be careful. That's all I'm saying. This could be a bull trap. Don't get caught up in this potential fake rally, and it could catch you up and you might end up bag holding, which does suck at the end of the day, and it forces you to take losses, especially if it was meant to be a shorter term trade, right? So the Dow Jones, without going too deep into it, up almost 12% today, up 11.4% to be exact, up 2,100 points. Just like the S&P downtrend, 50 SMA downtrend, that is clearly broken. Now we can maybe gap up to, let's say, 21,000, and on the high end, maybe 23K at this 180 SMA. But ultimately, I see this market continuing to go down. That's just my honest opinion, right? Nasdaq today up 7.8%, lagging the S&P and the Dow, but still incredible day, right? Up 546 points. And when it comes to resistance here on the Nasdaq, we can see this level right here being around 7,600 to about 7,650. This is a point of resistance from back in 2018, and it was a support back in 2019 in August to September. And obviously, since we broke that support, it's a new resistance. That is where I'm looking for a potential of rejection or just some sort of resistance, right? And overall, we can see with this bounce in the Nasdaq, pretty interesting on this 3-year 1-week chart, we're actually holding that 180 SMA, which again, that's pretty interesting stuff there, but still, I'm not convinced that the drop, the pain is over quite yet, right? So that's kind of what's going on in the market today. We're seeing a lot of bullish sentiment in the short term, especially in these technicals, right? Like we discussed, we're seeing a nice little pop-up here, but I'm still not convinced, guys. I am still not convinced, and overall, the downtrend is still that. It's still a downtrend, and honestly, it's still intact until we see a massive move above the main moving averages here on, most of the time frames, if not all of the time frames, that at least I have here on my personal ThinkOrSwim, right? So let me know down below in the comments, what are your thoughts on that? Now, let's get in with the rest of the video. And for me, guys, I didn't trade today. If I'm being honest, I did not make any moves today because of the uncertainty that is around the stimulus package, right? We still don't know if it's going to get passed, denied, whatever, negotiated more for a couple of days. We have to wait and see. So for me, too much uncertainty today. Again, I didn't want to get caught in this potential bull trap. I didn't want to buy into any longs today just because the market was green. So I'm personally going to wait and see tomorrow what happens. If we see some sort of resistance, a dump off, if we're selling the news, if the bill gets passed, whatever, I want to wait and see. So for me, the most comfortable thing to do today was to simply just watch the market, of course, like I do every day, keep up with the news, like I do every day. But it was to just sit back and not make any moves. That's kind of what I did today. And one thing, I forgot to update you guys on this, but my Microsoft swing position, I completely forgot, but I sold out at a loss. I forgot to mention you guys, and it was on this exact green candle. I saw this massive move, and I sold out, guys. I sold out, and this is one that, honestly, I went against my own rules with this swing trade, right? And that's completely my fault. And if you guys don't know, I was in at around $168, my average was, maybe closer to $167, but ultimately I was buying into Microsoft as a swing trade kind of before the whole CV got very bad to the point where it is now, right? And that was back about a month ago, a couple weeks ago. Again, it was in the month of February, right? And it came to the point where I stopped buying in. And I was like, this is what I feel comfortable putting in as of right now. It wasn't a ridiculous amount of money, guys. I didn't blow up my account, but, I put in a decent amount of money here, and then ultimately we failed to break out, and at this point, I should have sold out, but me going against my own rules, which one of the main rules when it comes to swing trading is don't fight the trend, I still held on. I went against my own rules. My main rule, do not fight the trend. And then you guys can clearly see what happened from there. We dumped down. I was red in my position. Then I started to get into that mentality of, maybe it's going to come back. It's Microsoft. I'm holding it. But then ultimately, I had to get out, guys. I had to get out, and I was looking for any big pump in the stock to completely just liquidate out, and I took a loss. That's just the truth, right? And it was on this day. I can tell you I sold out more towards the top, thankfully, right? And I was looking for any point to get out at this point. So massive green candle. A lot of buyers came in. I got out at about, I think it was like $156-ish. So overall, if we're taking a look from 168, 167-ish, down to roughly where I got out, I didn't lose a lot of money when it comes to percentage-wise, right? And even dollar value. I lost about 5%, which, yeah, when I'm looking to swing trade, I'm looking to cut it at about 2%. But, again, I got bit in the butt. It's my own fault. I went against my own rules, and I held it a little bit longer than I should have, but it's okay because the truth is, guys, with all of these intraday moves I've been making with the markets going down, I've recouped that loss and a lot more, and I freed up some cash, so I'm more cash heavy, which is great, and I have more money to work in terms of other trades that I can take advantage of now when it comes to just trading in general. So good thing that I remembered, guys, and the truth is it's because people have been commenting on the video. So that is what I ended up doing with Microsoft. I'm out looking for re-entry potentially when this whole debacle blows over. But until then, I'm out of Microsoft, guys. So let's just get into now a bunch of stocks and ETFs that I'm watching and that I'm looking to trade. And just two in general here that are reporting earnings. One did today. One is reporting tomorrow that I'm personally watching. And that first one is going to be Nike, ticker symbol NKE. This one is actually aggressively breaking out of the downtrend in this, or rather on this 4-hour chart. Today we were up nearly $10 per share, up 15%, and after market hours here, guys, up another $6 because Nike completely crushed their earnings report. I don't know if they set expectations low on purpose to absolutely blow them out of the water. Companies do that sometimes, but it seems like they did. I don't know. If I'm not saying they did, but their EPS came in at 78 cents versus the 59 cents expected, which is just crazy in terms of a beat there. And their sales came in at $10.1 billion versus $9.8 billion. So that's a beat as well. So in terms of Nike, I could see them moving tomorrow. Whether it's up to $80, $85, we'll see. It probably depends on the markets in general as well. But for a potential day trade, Nike is for sure on the table for me right now. Micron is one that also did very well today, and it's been doing great these past couple of days, up $12 per share from the bottom at $31, which again was literally a couple of days ago. And Micron, if we're taking a look, they're reporting earnings tomorrow. And again, this could be a short-term play like Nike, maybe a day trade, especially if they do well on earnings. But if they guide low, maybe we get a cut in terms of their guidance, a poor earnings report. This could also be a short play, maybe a put option, shorter term play here for Micron. Zoom, ticker symbol ZM. This is one that people were talking in the Discord chat about, and I said in yesterday's video, likely that it sells off today, and we got exactly that. Down 15% today, down about $25 per share. So at this point, we have to see what Zoom does. We're approaching a support at about $130. So if we hold that, it could be another short-term opportunity to go long, maybe day trade it for the day. But obviously day trade it for the day. That's what day trading is, right, Stas? Duh. And if we get the downwards move, maybe the 130 test and the break, we could maybe get a move down to the 115s, maybe low hundreds, which at that point, kind of like, what was the other one that I said, Micron, that could be another potential short play here on ticker symbol ZM. SPCE, Virgin Galactic, very, very strong move today, guys. It's crazy, right? These stocks, I'm telling you, sometimes the smaller stocks, more speculative stocks, they move a lot quicker than the overall markets, and sometimes they're green when the overall markets are red, kind of what space was like, I believe, yesterday, right? And space today up 25%. This is definitely worth watching for a potential move. You guys can see up to $20. That's really the next resistance that I'm seeing here on space. Actually, that's wrong. Maybe 18-ish dollars from where we are now to 18. That could be a move, maybe from 18 to 20. So space, SPCE, heavily watching this one. And although I've said on these videos I'm looking to short cruise line stocks, in the short term, they're moving up like crazy, offering a potential day trade opportunity, especially on this news of the stimulus package, maybe a bailout. You know, these stocks, they're moving aggressively. CCL up 14% today. It was up towards the $17 range even earlier, so you can imagine it was up almost like 30-40%. Norwegian Cruise Lines, what's the ticker on this one? NCLH. Up 42% today, up $4 per share. And earlier when it was at almost $16, at that point, guys, it was up like 50 to 60%, which is absolutely insane. Another stock moving aggressively is Delta Airlines, up 21% today. It almost hit $30 per share, 29 to be exact, meaning at that point, it was up more like 25 to 30% on the day. So with all this stimulus package news, the bailouts, these stocks, they're moving like crazy. So for us traders, it could be a good opportunity to watch them, although overall the trend might still be down because we can still hop in and out on the intraday moves of plus 10%, 20%, 30%, 40%, like we're seeing in some of these stocks, right? Netflix and Amazon, when it comes to the main tech names, these are the ones I'm watching the most at this point. Netflix, they got upgraded yesterday, and in general, they're holding up beautifully throughout this whole craziness, down nearly 5, 6, 7% from the peak, which compared to other stocks, guys, is impeccable, right? The other one is Amazon, AMZN. Amazon's doing pretty solid as well. Now it's at $19.50 per share. That's only a drop of 10%, guys, right? From its peak back in, February, middle of February. When you're comparing that to some other tech stocks in terms of their total drop, Amazon's doing very, very well. Facebook's down 30% from its peak, right? What is it? Almost 25, 30% as well. We have Microsoft down heavily, down 24, 25%. So Amazon, Netflix, they're holding up a lot better than a lot of the main big name tech stocks, even Google, right? Google, if we can see it here, is down, Okay, if this thing lets me click it, there we go, 27%. So I'm watching Microsoft. I'm watching all the stocks, but the main ones are Netflix and Amazon. And when it comes to gold, guys, and by the way, I did buy 5 grams of physical gold yesterday from Ampex. So watch out. Video is coming on that when I do receive that in the mail. Whether it's a week, 2 weeks, 3 weeks, who knows when I get it. Expect a video unboxing on that. But either way, gold just today up 7%, 6.5%, up $101, which is interesting. Gold is up. The market is up. Typically, stock market, S&P, when it's up, gold is down and vice versa. But the fact that it moved in the same direction today, that's interesting. Really, I don't know what I can make from that. To be honest, that might mean that, people are still fearing the dollar, the economy, the stock market. They're not really buying this whole stimulus move into pushing the market up. So they're thinking, okay, let me flood to gold. And we saw that insane V-shaped correction, which a lot of the time, this is the type of correction you see in the market when it gets very oversold. Although we're not quite seeing that in the S&P quite yet, but eventually, when it does recover, I don't know when that will be, but eventually we're going to see a similar type of recovery like that where it's very drastic, not as quick as how we came down, but it's going to be in the shape of a V, right? A V-shape correction at the end of the day. So gold, I'm watching that. GLD is an ETF that tracks gold, up 4.8%. So if you want kind of a paper way to trade gold, GLD, that's what I personally trade from now and then. I actually own it in my M1 account just to have some exposure to gold. And some other ones that I'm watching, guys, crude oil. I'm watching crude oil. And in general, I'm just tracking some ETFs that trade based upon crude oil. And some of those are DRIP. DRIP trades based upon XOP, which is simply an oil and gas based ETF. So if XOP goes down, DRIP is going to go up, right? So I'm going to be watching this one for a potential dump in oil. And in general, guys, that is what I'm doing. I'm really interested in potentially trading intraday in one of those stocks that we mentioned earlier. When it comes to longer term investing, what I've been doing recently, guys, is buying into SPHD. This is an ETF that is really a low volatility, high dividend ETF. Another one that I've been buying a little bit of is Realty Income. This one was up a whopping 17% today. Disney is one I've also been buying, although I'm fully aware they can go down further due to the parks business being shut, making up 30-40% of their revenue. I still believe in Disney long term, so I will continue to be a buyer. And honestly, guys, that's really all I've been doing. J&J as well, some long-term buying there, but that's really it. And overall, some other ones that people have been asking me about, Caterpillar. Do I think Caterpillar is going anywhere? Absolutely not. Caterpillar is a conglomerate that is going to be here to stay. We're always going to need the products Caterpillar produces. But since it's such a cyclical business, right, the economy is in a downturn, would I personally buy Caterpillar quite yet? Probably not. I would wait to see if we get prices in the 70s to 80s, maybe even the 90s, probably not 90s, more like 80s, 70s before I'd consider buying Caterpillar. Same thing with Toll Brothers. I've been getting questions about Toll Brothers. Don't know too much about them, but I know for a fact they're a luxury home builder. And with the stock market being rough right now, the housing market could be next, right? I'm scared to buy into a Toll Brothers. Although it was up 40% today, up $5.4. Are they going bankrupt? I don't know, but still, there's a reason why these stocks are crashing, guys, because with the economy potentially crashing, it is crashing, right? And with housing maybe going down the gutter next, who's going to be building? They're not going to be building as many houses. So for me, Toll Brothers, I'm not really interested, to be quite honest. But that doesn't mean it's not a good investment just because I'm not interested. But for me in general, the risk is just more than the reward right now. So I typically stay away from stocks like that. So overall, that's it for this video, guys. I hope you all enjoyed it. You found some value in it. If you did, as always, hit that like button for me and consider subscribing to the channel if you want further content like this, if you want to see further content like this, and if you want 2 free stocks from Webull valued up to $1,400. I have an affiliate link down below in the description box. All you have to do is put in $100 into the account and you get 2 free stocks, one of them worth up to $1,400. So go get your free money in the description. I'll catch you all in the next video. Peace out. Thanks for watching. As always, see you guys. How's it going, everybody?